Good morning. Let me get the website up too. Need to do that. Welcome to QuantBox Live. It is 6:36. My apologies. It was a little late making my coffee. 6:36 a.m. on Wall Street. A couple of hours, several hours, 3 hours before the open of stock trading on Wall Street. It's time to get our global macro on. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities across global markets. Stocks, yep. Commodities, yep. Currencies, yep. Maybe even some crypto, maybe. Just saying, it could happen. My name is Wayne McDonald. I'm the founder. I'm also an actual economist. Got a degree from a little school in Massachusetts. Cool. Why does that matter? Well, I'm a trader and an investor, and I would like to know how and why money is moving around the globe, and I use that as the basis of setting up my investing and trading strategies, aka global macroeconomics. QuantBox automates this whole process. Yes, you can be a full-time researcher and go into the Fed and pull out data, and go into the CFTC and pull out data and create a report that looks like this. This is the Commitment to Traders report. Yes, and we get it directly from the CFTC. Yeah, I mean, you could spend your whole time automating that or doing it, or you could spend your whole time doing it, or you could just automate it. You choose how you want to spend your time. As a trader investor, I don't want to spend all my time doing research. I want to spend most of my time actually trading and investing. La, 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 la. So anyways, there's a trial. It's $8. So if you're watching this on YouTube, your video is several hours delayed. So why don't you actually visit QuantBox and consider upgrading to an actual account, and you can attend these sessions live. Very cool, very cool. With that being said, let's just get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's get to going. Got to be logged into the right Gmail account. Otherwise, you won't be able to get into the Google Cloud. All right. Bitcoin up, but boy, again, the volatility up, but down. If you've been trading it overnight, oh yeah, it's up, but down. It was up and down, just all over the place. Euro dollar back to 107. That's the price it dropped to after the ECB meeting last week. S&P 500 hanging in there, trying to go up. Gold trying to head up. Oil heading up. And yields still high. I want yields to come down. But nonetheless, that's that. So I'm not exposed to the yield risk anymore. I'm just used to looking there. First, nothing going on as far as overnight evaluation of risk on or risk off, but a neutrality because of the Fed meeting tomorrow. Technically, the Fed meeting starts today. Yeah. Huh? Got my suit jacket on and everything. Very, very, very professional. Thank you. Thank you very much. So yeah, the 2-day Fed meeting starts, and this is where they start to hear about the situation of the economy from their, well, there's two different speakers. One is sort of like the state of the economy, and then they go through the beige book. I already went through the beige book. So I have a general sense that there's reasonable expansion still happening across the United States, but slowing, almost neutral. So anyways, they're going to discuss that tomorrow. They're going to discuss strategy and then develop the press release. So, anyways, so the markets are mixed right now, and nobody's really deploying capital because of this risk, and you can see it across the board. Okay. Now, over the last month, VIX is down quite a bit, and that's what you would expect this time of year. And that tells me that, well, people are not hedging against the stock market falling. Seems like maybe they just got out of the stock market. Some people, anyways. But nonetheless, look, not great trading opportunities presenting themselves right now. I imagine this is going to change dramatically by the end of the week. As a reminder, not only do we have the Fed meeting on Wednesday, I think it's the Bank of England, Swiss National Bank, and Bank of Japan all on Thursday, and Thursday. So here's us observing nothing. Most things are things that are down about 1/3 of 1%. Things that are up about 1/4 to 1/2, not even 1/3. So I'd say, yeah, generally nothing's happening. What you want to see is this is risk on, or you see something like this is risk off. And what we see today is whatever. So be careful today, be neutral, be patient, be disciplined. Mhm, mhm. I think if you go through the price forecast, you'll find that many of them are flattening out. So right now we're bouncing at 107, and QuantBox has this, if the trend is going to continue up to as high as 107 and a half and down. That's worst case scenario. Base case, this 107 area holds as resistance and then falls. In best case, it drops and continues. And so we know right now that we're above 107. So we're kind of like the next sell zone based on trend analysis. Okay. Again, what's happening here is fairly simple. QuantBox is creating an average price, which is now sloping this way. Okay. There's your average price over this period. And then the next thing you do is you calculate the variance. So you're looking at these moves here. And then you take the square of that variance. Okay. And you get standard deviation. And then then QuantBox calculates the rise over the run, which is the slope, so that you can then slope that standard deviation this way. And that's how QuantBox creates um, the linear projection with the standard deviation. So y equals mx plus b. Okay. And then we go this way. So that's all it's doing. So if the trend stays exactly the same, that's how you get your best case, base case, or worst case, base case, best case scenario. It's inverted because it's a downtrend. QuantBox in general, though, is neutral on this pair. Cool. So be careful. That may not continue because it's not a bearish scenario. Okay. Like I said, we got a lot of interest rate decisions coming out. You got the Fed, right? Fed. S&B, Bank of England, all that kind of stuff. I was thinking about something else, so I must be not thinking about it right. Hang on. Anyways, what should we do? Yeah, in the back of my mind, I'm wondering, like, is this ever going to change? Oops, not too bad. Is this ever going to change? Wow, I don't know. Maybe we can do a price forecast on it. I mean, the bond market, you have to understand, is the smarter market, so to speak. Um, People say that because the bond market is significantly bigger than the stock market, way bigger. Oh, this whole thing is just not working, huh? All right, I have to go through that. The bond market is much, much, much bigger than the stock market. And the stock market very often is just like speculation, like pure speculation. Now you're like, oh, well, Wayne, we have other data that we can use. But yeah, most people buy stock because they hope it's going to go up. And of course, the CEO is where you get a lot of your information. And that person is highly incentivized to lie, because that's their job. In the bond market, it's just math. So that's why it tends to be considered the smarter market, but unfortunately, that's not price is not working for us. So, anywho, so we'll go back to here, and we'll go take a look at stuff that we talked about yesterday and last week as far as technical analysis is concerned. One of the things we've been wanting is dollar weakness as well as yen weakness. Some of that has shown up. We've been looking at commodities. And so one that I set up a couple of times yesterday was the Aussie yen. And I was surprised overnight. I think I was in this and then I'm not in it. And I'm not sure what happened. I must have set up my trade incorrectly because I don't see anything that went wrong with this trade. But I'm not on it. I was. So, anyways, take a look at that. If we go further back, add a little more time to this, I think it'll be much more self-evident. So this is the way it's set up. Delete. So I'm happy to say that that one worked out just tickety-boo. Okay. And on the smaller time, there was a couple of tests. Okay. So this was just nice in here. Oops. Okay, there's the higher high. Okay, remember I looked left. I created this zone right around 95. Okay. Cool. Hope some of you got that. La-di-da-di-da, off she goes. Commodities strong in a high inflationary environment. What else do we got here? Here's Kiwi. This one I'm still on. This was the mediocre one of the two. So we had sort of an up, a down, an up, a down, and now we have the up. And what do you expect next? Yeah, something like that, eh? So I'm in at whatever this is, 87 and a half. I'm only up 25 pips or something. But we'll see how far it goes. I need to see it break before I move my stop. I mean, I could at least use PSAR for my stop now. Okay, either on a 4 hour. Very often I use the 1 hour. So we'll see. And that 1 hour has me basically moving it to break even. That'd be the difference between a day trade and a swing trade, basically, the 1 hour or 4 hour. Okay. Boo, 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 boo. Kitty cat yen. This is the tough one, the scary one. Only because we know we know that this is a higher risk area, but we also know that in the month of September, and only the month of September, the target is R3. But it doesn't make this less scary because we know basically there might be one other month where we'd go for an R3. So 10 out of 12 times, this is where you always take profit. So maybe you always take profit there 12 out of the 12 times, and it'd be okay because these are still higher risk, but not unusual for September. Pattern here is the M2, okay, into here. That was respected. Now this rotation here. So just riding the moving averages. Lovely. Just lovely. Lovely. Okay. So everything is right as rain. So CAD yen up, Aussie yen up, Kiwi yen up, even euro, but I don't really want to buy this. And there you go. You can see all the choppiness. Wow, huh? Look at that consolidation. I'll get rid of this. This is just from discussion. Okay. Wow. Okay. You can have it. Not interested. Did I just kill it? Euro. No. Okay. Swissy, don't really want it because I think the Swiss National Bank is now going to start moving into a scenario of purposely having their Swiss franc be weak, because I think a lot of money is going to move out of the UK and out of the Eurozone and into Switzerland, and they don't want they don't want Swiss franc strength. So I'm neutral on this, and I think a lot of people are, if you look at that. And then you might say, but Wayne, I see a web. Well, shh. People get so excited when they see patterns and stuff. I'm like, all right, we need to trade reality, not patterns. I'm not against patterns, but you don't make decisions just because of a pattern in of itself. So you might see a pattern, you're like, but that's a bullish pattern. All right, but I start with the central bank, not pretty pictures. And I don't think the central bank, which we're going to hear from in 72 hours, I don't think they want a strong Swiss franc, so they'll verbally intervene. The UK is in serious trouble, and they may be in a situation where they just can't raise interest rates anymore. This period back here, this big rally, was because GDP didn't go to zero. So that allowed maybe one more interest rate hike. And now maybe if you thought the UK was going to drop into negative GDP, which is not good, okay, then you have down. I have an uptrend here to represent, like, if it is going to go up, it kind of has to do so now. So if you're like, well, I'm still a little bit of bullish on this, you're bearish on the yen, and you think the Bank of England is going to do something great, okay, it can't get any lower than this and still be bullish technically. I think it goes through that, it either becomes bearish or neutral. Okay, but not bullish. Okay, and I set this one up as well. If you recall in here, we talked about the potential for this to turn bullish, and we have a higher high. So let me remark this. Okay, that's why I put that there. And then we have a bottom formed there. And now we have a higher high. I know I probably need to zoom in, but higher than this high. So let me zoom in, make sure everybody can see this correctly. Boop, boop, boop. Okay. So what I see here now is a higher high. So let me show you how to handle that. And you can do it this way. Insert indicator trend. Nope. What is it called? What do you call it? Where do I find it? Let me try my toolbar. Customize. Equidistant channel. That's not really what I want. Maybe I do. I just want parallel. And there's pitchfork. No. Well, we'll do equidistant. See if it gets me what I want. No one gets hurt. All right, there we go. So you can create a channel like that. I mean, you don't have to, but mentally, you're like a higher high, okay, higher low. Now, I would expect this to go up a little more before the pullback. So let's change the slope. Let's say between now and the end of the day, it goes a little higher. So you get something like this for tomorrow. You can see, well, that's exactly what daily pivot points do. I know. I'm just trying to show you that all of this makes sense. So again, if you were a bull on the Japanese stock market, then this was an area we identified as potential support. Now we've tested it. Now it's made a higher high. Do you want to engage with a higher low? You do you. Here's today's target. Here's tomorrow's target. Noise. And if we get that, well, that's more risk on. When the Japanese stock market goes up, all yen pairs tend to go up. It's risk on. Cool thing is, I'm a risk on guy. Look at me. Clearly a risk on kind of guy, right? Yeah. You got to know what you stand for. I love the saying, bears sound smart, bulls make money. Right? I like to toe the line both. So I think that's it for today. It's the Tuesday before the Fed meeting. So everyone's probably going to watch oil. That's, I think, going to be the big thing. So I hope you have a wonderful day. Be safe. Remember, tomorrow's the big volatility today. So don't overtrade today. I don't recommend throwing down trades and hoping the Fed makes it work, but you can't do that. But that would be closer to degenerate gambling. And you probably don't need access to incredible amounts of fundamental and economic data to be a degenerate gambler. Right? But anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you. Cheers.